Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about IREN Limited quarterly report. IREN Limited offers a range of businesses and services that cater to the growing demand for data center solutions and digital assets. At the core of their operations are vertically integrated data centers, which provide computing hardware, electrical infrastructure, and hosting facilities for various clients. In addition to its data center business, IREN Limited also engages in Bitcoin mining, harnessing the power of a peer-to-peer network of computers running the Bitcoin software to create and transmit this scarce digital asset. This diversification into cryptocurrency mining allows the company to tap into new revenue streams and expand its presence in the digital economy. With operations spanning across Australia and Canada, IREN Limited has established itself as a significant player in the data center industry, providing comprehensive solutions for businesses and organizations seeking reliable and secure computing infrastructure. Unfortunately, I don't have access to the text you provided. However, I can still provide a general essay on what could cause a stock price to skyrocket. The sudden surge in a company's stock price is often a result of various factors that contribute to its growth and success. One possible reason for this phenomenon is the company's exceptional financial performance, such as increased revenue, profits, or market share. This can be due to innovative products or services, strategic partnerships, or effective management decisions. Another factor that could lead to a stock price increase is positive news and announcements from the company. For instance, a major contract win, expansion into new markets, or breakthrough in research and development can create excitement among investors, driving up demand for the company's shares. Additionally, external factors such as changes in industry trends, government policies, or economic conditions can also contribute to a stock price surge. If a company is well positioned to benefit from these changes, its stock price may rise accordingly. In some cases, speculation and market sentiment can also play a role in driving up a stock price. If investors become optimistic about the company's prospects, they may bid up the price of its shares, creating a self-reinforcing cycle. It is worth noting that a sudden surge in stock price can be short-lived if underlying fundamentals do not support it. Therefore, investors should always conduct thorough research and analysis before making investment decisions. IREN Limited maintains a market capitalization of $13 billion, broadly in line with the industry peer group. IREN Limited trades at a higher price-to-earnings ratio of 22 times and a higher price-to-book ratio of 3.8 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The company maintains a moderate leverage profile, with liabilities making up 38% of total assets, suggesting a balanced approach between risk management and capital efficiency. Liabilities have grown faster than assets and equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The primary drivers of revenue growth for a company can be attributed to several key factors. Firstly, fluctuations in the price of Bitcoin have had a positive impact on revenue, as well as the expansion into high-performance computing, HPC, and artificial intelligence, AI, services markets. Additionally, significant increases in Bitcoin mining revenue and AI cloud services revenue have contributed to growth. The company has also benefited from proceeds from at-the-market offerings and the issuance of convertible notes, totaling $4.15 billion. Furthermore, deferred revenue from AI cloud services contracts has increased by $45.7 million, while accounts receivable related to these contracts have risen by $25 million. On the other hand, potential drivers of revenue decline include market events that negatively impact sentiment towards digital assets and the broader industry. Tariffs on hardware and equipment imports could lead to higher prices and limited availability, while excessive redemptions or withdrawals of digital assets or fiat currencies from trading platforms or custodians may also contribute to a decline in revenue. Net income and profit margins. A shift in fortune, the financial performance of a company underwent significant changes between 2024 and 2025. Net income, which was minus $73.6 million in 2024, saw a remarkable turnaround to $229.2 million in 2025. This substantial increase is largely attributed to the rise in unrealized gain on financial instruments and total revenue, offset by various expenses. A closer look at profit margins reveals an interesting trend. Net income margin decreased from minus 44% in 2024 to 54% in 2025, indicating a significant improvement. However, adjusted EBITDA margin tells a different story. For the 3 months ended December 31, it decreased from 54% in 2024 to 41% in 2025. On the other hand, for the 6 months ended December 31, it remained relatively stable at 38%. The reasons behind these changes are not explicitly stated, but they can be inferred from the provided information. The increase in net income and improvement in net income margin suggest that the company's financial performance has improved significantly. However, the decrease in adjusted EBITDA margin for the 3 months ended December 31 indicates a potential decline in profitability during this period. The company's financial performance has shown a significant improvement in recent years. One key indicator of this growth is the generation of positive operating cash flow. This means that the company is able to generate more cash from its core operations than it spends on expenses, investments, and other activities. According to the provided information, pages 22, 70, and 72 confirm that the company has achieved a positive operating cash flow. This is a crucial milestone for any business, as it indicates that the company's financial foundation is stable and sustainable. With this achievement, the company can now focus on investing in growth initiatives, paying off debts, or returning value to its shareholders. The generation of positive operating cash flow also suggests that the company has been able to manage its costs effectively, optimize its operations, and maintain a competitive edge in the market. This is a testament to the company's financial discipline and strategic decision-making. As a result, investors can have confidence in the company's ability to generate long-term value for them. The company's financial situation has undergone significant changes in recent times. A notable increase in debt levels is evident from the provided data. The total debt has risen from $1,122,835 to $4,516,384 between June 30 and December 31 of 2025. Similarly, convertible notes payable have increased from $962,765 to $3,685,296 during the same period. The rise in debt levels is accompanied by a substantial increase in interest expenses. In 2025, interest expenses reached $16,882, a significant jump from the mere $75 incurred in 2024. Furthermore, finance expense has seen a considerable surge, rising from $1.7 million to $10.7 million, and then again to $19.9 million. These changes indicate that the company is facing increased financial burdens due to its growing debt levels and associated interest expenses. The performance of various segments and regions within the company has been mixed. On a positive note, AI cloud services have shown remarkable growth, with revenue increasing by 550% in 3 months and 324% in 6 months. This significant surge in revenue is evident from the comparison between 2024 and 2025 figures, where the segment's revenue grew to $184.7 million from $116.1 million for 3 months, and to $425 million from $168.9 million for 6 months. In contrast, Bitcoin mining has been a struggling segment, with significant losses in gross profit. The segment reported a loss of $63,368 in 3 months and $143,313 in 6 months. Unfortunately, no specific revenue or EBITDA figures were provided to give a clearer picture of the segment's performance. Overall, While AI cloud services have shown impressive growth, Bitcoin mining has been a disappointing area for the company. Management is optimistic about the company's outlook, with a focus on growth through strategic expansion. The company plans to develop existing data center sites, design and deploy innovative cooling systems, and diversify into high-performance computing (HPC) solutions. Additionally, management aims to expand into AI cloud services and potential colocation services. In terms of market expansion, the company is targeting regions with low-cost renewable energy sources to build new data centers. This will enable reliable and long-term power supply through grid-connected access. Furthermore, an agreement has been reached with Microsoft Corporation for dedicated GPU services at Horizon data center facilities. To mitigate risks, management is prioritizing electricity supply and infrastructure security, as well as managing variance in minor hardware performance. Securing low-cost electricity and timely grid connections, particularly renewable power, is also a key focus area. Financially, the company plans to raise additional capital to meet growth objectives through alternative financings, such as unsecured and secured debt, equity, or equity-linked capital. This will enable the company to register additional ordinary shares for sale under the sales agreement. Overall, management's strategy emphasizes strategic expansion, risk management, and financial prudence to drive long-term growth. The company has made several strategic moves through acquisitions and divestitures to enhance its financial position and expand its digital assets. In terms of acquisitions, the company has purchased convertible notes with varying interest rates, including 0.25% senior notes in 2032 and 1% senior notes in 2033. Additionally, it has entered into a Bitcoin purchase option in June 2025, allowing for the acquisition of this digital asset at a predetermined price. Furthermore, the company has onboarded Coinbase as an alternative platform to liquidate its mined Bitcoins, providing a more efficient means of managing its digital assets. This move demonstrates the company's commitment to adapting to changing market conditions and optimizing its operations. On the other hand, the company has also engaged in divestitures to streamline its financial obligations. Specifically, it has repurchased ordinary shares underlying capped call transactions entered into in 2030 and 2029. By eliminating these obligations, the company can reduce its financial liabilities and improve its overall financial health. The company's financial activities over the past period have been notable for two key actions. Firstly, it is clear that the company has engaged in share buybacks, with a significant amount of $1,632.4 million being spent on repurchasing shares. This indicates that the company is committed to returning value to its shareholders through this means. On the other hand, there is no evidence to suggest that the company has paid dividends to its shareholders during this period. Despite the absence of dividend payments, the share buyback program demonstrates a proactive approach by the company to enhance shareholder value. That concludes the financial summary for IREN Limited. Feel free to comment below, and I will be happy to answer them when possible.